Okay. Okay, good evening, everyone. Okay, welcome to our programs today. Now, today itself, right, we have Mr. Victor Say. Okay, he'll be covering, Victor, you're in, right? You can start to share your slides first. Okay, so, yep. Okay, today Mr. Victor, right, will be covering on fundamentals of Forex trading, hedgings, and risk management. Okay, and if you have any questions, right, you can definitely ask him about Forex and how to go about hedgings and what are the risks that you can protect yourself. Okay, so yep, I'll hand over to Victor. Victor.
Hi, folks.
Okay, yeah, we can hear you. Good.
Can you hear me?
Yeah, good.
Okay, good evening. I guess Joe has introduced you to me. My name is Victor Say. Just a quick introduction of myself. I have been in the foreign exchange industry for the last 35 years. Of course, as a dealer, as a treasury manager, and as a private banker. Over the last 35 years, I've seen the market grow by leaps and bounds, especially over the last 10 years because of the fintech. All right, so a lot of platforms are using the fintech technology to increase the foreign exchange transactions. So what I'm going to do over the next 40 minutes or so is to go through with you what I'm going to teach for the upcoming Skill Futures course, so that after finishing that course, I will repeat again later, you will take home with you a skill that you can use, especially during these COVID times, you know, where you stay at home, you have nothing to do. You can actually make some money if you have the skills, the necessary skills to do some trading. All right. Of course, there are some important caveats in trading. Okay. Now, the first thing you all need to know is why, all right, bank dealers, about 80 to 90% of bank dealers make money. 80 to 90%. Okay, and then on the other hand, okay, one second, hang on. The first slide, I believe. Okay, so why a high percentage of retail FX investors lose money? All right. Now, of course, it's very, very simple, the explanation. Bank dealers make money because they are very well trained. All right, they're very well trained. You have a new dealer, a trainee dealer who comes in, and then he will be supervised by either the chief dealer or by the treasury manager or by whoever is training him. All right, and then you have the retail FX people. All right, those are the people who learn a few so-called lessons on foreign exchange, and then they will trade. They will start trading. So when they start trading, they either know technicals or they know fundamentals. They do not know both, all right? Many times. So if you trade with technicals, it's okay for certain times, but many times after 3 months, 6 months, sometimes even 1 year, the market change. Technicals take a back seat. Fundamentals come back to the fore. So therefore, if you only know technicals and you don't know fundamentals, you will definitely lose the market. So knowing both the fundamentals and the technicals are very important for those of you who want to trade either for investment or to also trade, later on I'll explain again, to cover your FX exposure if you're a company. All right, now, so always remember I told you, the high percentage of losses of retail FX investors is that because many of them are trained only on one side. It's either technical or it's fundamentals. They do not do both. So many will skip one. That means, in a sense, you are like 50% wounded. All right. So, of course, when you're 50% wounded, the other 50%, the chances are getting lesser and lesser. So therefore, you will suffer the losses. All right. So during the skill futures fundamentals of Forex trading, hedging, and risk management course, I will go through from the beginning. That means even as a very new person to foreign exchange, you will learn how are foreign exchange rates quoted. You will learn what is called direct quotation or indirect quotation. All right, the value of 1 point. How much is 1 point? If you do, let's say, a $50,000 deal, all right, when you make 10 points, how much is that 10 points worth? You will learn that, all right? And then, of course, as in any foreign exchange deal, you have to know, just to know, don't have to know by heart what are value dates. And then I'll also teach you what are cross rates and what is a forward market and the short date market. All right. So once you come for the course during the morning, the first part of the morning, you will have a very clear understanding of what is foreign exchange. All right, how the market works, how the foreign exchange market operates. All right, it is very different from stock markets. Stock markets are very different. Stock market, there is a timing for the market to operate. All right, of course, in Singapore, it's like 9, I think it's 9 to 5 or something around there, 9 to 4:30, 9 to 5. And then you stop. All right, the foreign exchange market is 24/5, meaning it starts on Monday morning, New Zealand time. All right, New Zealand is about 4 hours ahead of us. And then it ends on Friday, 5 p.m. New York time, which is 5 a.m. Singapore time on Saturday. So there's many opportunities where you can do deals, where you can trade. So even during the course, I will tell you that when you miss certain opportunities during the course of the day, just leave it. Don't chase the market. All right. When you chase the market, that's where you will lose. Right? Because you chase and then you say, oh, I don't want to miss, I don't want to miss. So even though the deal may not be a good deal, so-called, you want to get in because you feel, oh, if I miss it, then I will miss everything. So I will, of course, tell you what to avoid. Okay, and then during the second half of the course, right, which is like late morning and during the afternoon, I will cover the interpretation of economic indicators, all right, and how these indicators affect the currency markets. They are very important, all right? Because nowadays, if you just do technicals, you'll find that sometimes it gets nowhere because people are waiting for the fundamentals to show up before they can start trading. Okay. Okay, and one. Okay, just to give you an example of how to use fundamental data to trade. Okay, now the theme at the current moment is inflation. All right, if you read the newspapers, if you read the news, if you watch TV, you watch CNBC, you watch Bloomberg, everybody is talking about inflation. All right, because prices are skyrocketing everywhere. So if you, even in Singapore, if you go to the hawker center, you go to the shops, you see these guys telling you, oh, the prices has gone up because there is supply chain disruption, blah, blah, blah. So therefore, inflation has gone up. And therefore, eventually, we will have to pass a cost to the customers. So when we talk about inflation, in foreign exchange, the data is called the Consumer Price Index, the CPI. All right. This index was not important at all for the last 15 years, I would say, or 20 years. And all of a sudden, right now, it has assumed greater importance because the market wants to find out if inflation is transitory or is it going to stay? All right. If the market is to be believed, and most likely, many of the so-called seasoned traders, the seasoned fund managers, they all think that inflation is going to stay. It's not going to be transient. It's not going to be temporary and then move back down. So therefore, if inflation is not going to go down, especially in the US, then there is a very high chance that the Federal Reserve, okay, the Federal Reserve is the central bank of the United States, they may increase their interest rates. So if they increase their interest rates, what happens is the US dollar will become stronger, right? So the first 3 months of the year, January, February, and March, the dollar was very weak. And then all of a sudden, no, sorry, it was very strong. And then comes April, May, the dollar weakened again. All right, and then come June, all right, now we're into the 9th day of June, the dollar is again finding itself to be very steady because the Federal Reserve will meet in about 9-10 days time or thereabouts to deliberate on whether they want to talk about this term called tapering. All right, tapering means they want to withdraw stimulus. They want to withdraw money from the system. Right. So if they withdraw money from the system, what's going to happen is less money, interest rates will go up, and interest rates go up, the US dollar will go up. All right. So this is just an example of how you can use fundamentals to do your trading. All right. So therefore, what people will do is many of them will position themselves, so-called, for a stronger dollar or for a weaker dollar, depending on the market and depending on people's views. Don't forget, in any market, there is somebody who wants to buy. There's always somebody who wants to sell. So therefore, that's why you have the market. So of course, eventually, if there's more buyers than sellers, the market will go up. If there's more sellers than buyers, the market will go down. All right. So at the moment, there is still a little bit more sellers than buyers. So the US dollar is a little bit weak. But if the Federal Reserve gives an indication that they're going to withdraw the money, so-called, from the system, and they're going to talk about raising interest rates, may not be now, no, may not be the next 1 year, no. Could be like middle of next year or end of next year. The FX market is very, very forward-looking. So therefore, it will start to buy the dollars and make the dollar a bit stronger. All right, so that's an example of how to trade using fundamentals. Again, to repeat, it doesn't mean that technicals are not important. It is, all right? I use technicals myself to go into different positions, to get out of different positions. All right, so you will learn that when you come for the course. Okay, now, also, what you're going to learn from the course is how does foreign exchange volatility impact the profitability of a company? Okay, this course will help participants recognize that foreign exchange movements can have a huge impact on its bottom line and how they can go about hedging their exposures. Okay, for example, in the late 90s, I have a friend who owned a chemical company, and the guy was quite puzzled why there was a shortfall in his profitability. And he always tells us, hey, you know, I'm supposed to make $500,000 more, but cannot figure out. So of course, after looking at his invoices, you know, my buddies and I, we found out that on many occasions, his foreign exchange led to his losses. Because why? He bought Japanese yen at a high level because many of the chemicals were from Japan. All right. And because he sold to the US, he sold to other countries, and he invoiced in US dollars. And when the US dollars come back into his account, and when he wanted to convert the US dollar into Sing dollars, he always converted it at a low. All right. So he gets hits both sides. He pay yen at a high price, and he sells US dollars, he get a low price. That's why he lost money. All right. Lost in the sense of lost opportunity of $500,000, which he could have kept if he had watched the FX market. So, of course, I've already started teaching foreign exchange a long time ago, about 30 years ago. He attended one of my courses some 20 years ago, and he was very, very appreciative because now he follows the market, and he sometimes make money from following the market. Because now he also does foreign exchange and also options on foreign exchange. So he does both sides. So he actually made some money by attending the course. So I hope for those of you who have companies and who have exposures, of course in Singapore you cannot escape. Singapore is so small. When you do business, mostly it is overseas. Mostly it is international. So therefore, you have to be careful of the foreign exchange exposures that you have. What's going to happen in US dollars the next 6 months, 1 year? What's going to happen to euro? What's going to happen to yen? What's going to happen to Aussie? All right. So that is very, very important. All right. When you do business overseas, to know that your exposures can have an impact on your bottom line. Okay. Now, after you attend this course, you will have acquired a new skill, all right? And that skill is how to trade foreign exchange, and other asset classes. Right? Of course, you may not be running straight away. You know, the moment you finish my course, let's say on June the 19th, you know, wow, I'm the champion trader. Please don't do that. It takes time. All right. But I believe that you'll be able to trade well, to invest well in foreign exchange if we journey together. All right. If we journey together. So foreign exchange is an asset class which can help you make quite decent money with your investments. But please be aware that you only put about 10% of your wealth into foreign exchange. Okay, that means don't bang everything. Don't put all your eggs in one basket. And then say, oh, I'm going to Hokkien word, I'm going to chiong. Okay, I'm going to chiong and make money. No, slowly, you know, you can make money. All right, and if you don't rush, you wait for the market. You will do very well. Okay, after doing this for like 35 years, and after training so many people, the one feedback that I always get from my students, from the learners, those who come and take the course from me, because I'm also lecturing at SMU, I also lectured at Kaplan. The main theme, all right, the main theme is, sir, I over leveraged. I became greedy. So therefore, I lost money. All right. So the main thing to remember is, please do not be in a rush to make money. Build up your capital. All right. And then from there, you can start to make your money. All right. So it is a very so-called easy process. All right. To make decent money if you are in no rush. All right, so foreign exchange investment is different from foreign exchange speculation. If you want to speculate every day, you say, oh, I want to do a day trade. I'm a day trader. I'm going to buy and sell, buy and sell, buy and sell, and to make some money. Let me tell you, unless you're prepared to sit at your table, all right, for the next, let's say, 8 hours, 7-8 hours, you will find that eventually you will lose money. You know why? It's very simple. You are not like a dealer who's paid to do a job. He sits there for 6-7 hours, 8 hours, and he makes some money. Can you afford that? Of course, some of my students very cheekily, they say, sir, we can, you know, because we also want to trade full-time, like the full-time dealers. And my next question to them is, do you have enough money like the bank dealers? The bank dealers, they have deep pockets. Why? They have the bank to back them up. That means when they lose the bank's money. At most, what happen to them is when they lose the bank's money, they get sacked. And when they get sacked, they go to another bank. Another bank will take them. Because why? They are trained. They are trained to deal. They are trained to make money. You lost money in your previous bank because maybe the feng shui there not so good, because maybe your boss down there not so good, give you a very low limit. There's many factors that can happen. All right, to the dealers. All right, so that's what we always hear, huh? So once you have attended this course, basically, you can trade foreign exchange, you can trade commodities, you can trade, commodity means soft and hard, huh? Whether it's gold, silver, orange juice or whatever. But after saying all that, I have to clarify again. I prefer that when I teach people, I say, please concentrate on one or two markets. All right, if you want to do foreign exchange, you do foreign exchange. You can still do stocks, but stocks a bit longer term. All right, so you can do that, or you can say, I want to do gold, I want to do silver. You can, but don't do too many things because you are not, all right, focused. Once you're not focused, then if the market move in the currency markets, you miss the boat, right? So what I do is normally I stick to foreign exchange. I traded stocks in the 1980s, early 1990s. After that, I stopped. All right, now just doing foreign exchange, and I love teaching foreign exchange. I've been doing that again, like I said, for the last 35 years, and will continue doing so. Okay, well, once you finish this course, you will be part of a chat group where you will enhance your knowledge on foreign exchange, and about once, twice, sometimes even up to 3-4 times a week, I will give you some trading ideas. Maybe I'll say, okay, today you can buy Aussie, today you can buy TV. I do not like the day traders, buy here, sell here, take 30, 40 points. I say you can buy for a bit longer term, all right, 1 week, 1 day, 2 days, 1 week, 2 weeks. And if you want to take profit, you can take profit anytime. Or if you're not sure, you can go on the WhatsApp, ask me, and I'll tell you what I think. And then you can decide for yourself whether you want to take profit early or you want to wait. Okay, now, in addition to attending the course, you will receive 2 free ebooks on foreign exchange and trading. I will repeat this again later on another slide. All right, later on, and also some notes, additional notes on what you call Fed watching. That means you've watched the Federal Reserve. All right, why do people watch the Federal Reserve? Because they are the US Central Bank, and being the largest so-called richest country in the world, it is important that you know what the Federal Reserve is doing. All right. So for example, now, over the next 10 to 12 days, everybody's eyes, everybody's ears are glued to what they think the Federal Reserve is going to do. All right. So, so if you have an idea of where they are heading, then you can position yourself whether to buy dollars or to sell dollars. Okay, so that is one thing that you can do. Okay, I will repeat more numbers later. Okay, you can call 9452-1922. All right, later on, I'll give you the QR code to register for the course. 9452-1922 is my number. So I will get it very, very quickly, and I will normally reply within minutes. All right, within minutes. Okay, next. Now, when you attend this course, the first thing is, it is Skill Futures approved. That means you can use your Skill Futures credit to offset the $500 course fee. All right, so you can see from the slide there, all Singaporeans aged 25 years and above, you have an opening of $500 credit. All right, and this one does not expire. And then last year, they top up $500 again. All right. So if you have not used anything at all, now you will have $1,000. All right. And for those of you who are like, if I'm not wrong, I don't follow so closely. I think if you're like 40 to 55 years old, something around that age, you get another $500 more, like to enhance your training. So you have quite a bit of money there, right, to use. And that the one that was credited last year expires in about 4 years time. All right, 4.5 years time. So this course you are attending is Skill Futures claimable. So you can claim, if you have the 500, you claim everything. All right, so it's actually like a free course you're attending, a free course that will give you, a skill to learn now. Okay. So now, and during, okay, now the pandemic, okay, I'm just digressing a little bit, has actually opened up many avenues for people, and this is one of the avenues. I mean, this pandemic is slowing down, but it's not going to go away. But you never know with viruses. There may be another similar one somewhere. We don't know. 1 year, 2 years, 5 years down the line, and then you get stuck at home. So sometimes you get stuck at home. What do? You can trade. Okay, once you learn this skill, you can trade, because many are now online. All right, you can go to the platform. You can start trading. You don't have to trade very big. Okay, some people make $400-500 a month, and they're happy. So it depends on what you want. Okay. So during the course, you can tell me what you want. All right. What you want to do, and I can journey with you. Right. I can journey with you. Okay. Just to again repeat, what you will receive after attending the 1-day physical intensive class, it's basically a lifetime learning support. All right. Lifetime access to a highly experienced FX trader and trainer, which is me. All right. You have my mobile number, which I gave you just now. And then, of course, I will share with you regular updates on the market, what's happening, all right? And then some of the other learners, some of the other participants, they will also come in and share. All right, so in that sense, you all will share with each other, you all will learn with each other on the movements of the market, and hopefully, all right, to make money, all right, from your investments. Again, don't have to be very gung-ho, don't have to be very so-called greedy, for one of a better word, is to set yourself a target and say, okay, I think if I invest 5K, I want to make 2K a year. 5K, 2K a year is 40%, no? And that is very good, no? All right. Then people say, wow, actually not bad. Is it easily achievable? If you ask me, yes. That means like 3% a month, which is very achievable. All right. I like to use 30 to 40, 30 to 50, is because it is realistic. All right. But when people come to you and they say, oh, I have this guy who make 500%. Again, how many people are like that? All right. We want to be realistic. We don't want to have one gung-ho fella coming and say, wow, this guy makes so much money. All right. I mean, I can share with you. This is the truth. 2015 and 2016. All right. During that 2 years, I made 450%. I can share with you. All right. I took up profit. Of course, I made 450%. But when Donald Trump came in to office, I lost back about 110% of those 450%. That means I lost back about, I gained total about 340%. You can make, if you catch the market correctly, you're able to make good, decent income. All right, but don't rush. Okay, the main thing is don't rush. Okay, so you will be in that group, and then you will learn. And the feedback that I get from some of the other learners, they may not be so active, on a WhatsApp, but there's always a few who are very active. They'll come in, they'll put in their views, they put in their whatever, and then people can learn from there. So it doesn't mean that if you're quiet, you don't share, you're not welcome. You are. Some people are just shy, so they don't share as much. But and sometimes they come to me on their personal WhatsApp, which is also okay. All right. So you don't want to go in the group, in the chat group, you can come personally, no problem. Okay. So if you can register by this Friday, I can stretch a little bit more. Okay. No problems. The reason why this Friday is because the course is next week, 19th June. So normally we have to give a few days. When you do the registration, you have to claim your stock futures. That will take a few days. All right. So that's why we want to do it as early as possible. But if you do like Friday, Saturday, Sunday, it's still okay. All right. So you can see, it's a repeat. You receive the 3 complimentary content pack intensive books. All right. The notes. It's entitled Maximizing Profits and Minimizing Losses in FX Trading. Introductory Guides to FX Market and Trading. Becoming a Trading Master. That's a book. Okay, that's a book. Okay, so you can register for the 100% skill futures credit claimable course. All right, you can scan the QR code. All right, then you can apply. Or for whatever reason, if you something wrong with your phone or whatever, you have my mobile. You can WhatsApp me personally. I can also give you the link. All right, just in case you miss or you your thing not so accurate. All right, so I'll be able to help. All right, so what's going to happen is when you come for the course on the 19th, if you choose to come, believe me, you will learn quite a bit. All right, you may not become a terror dealer, right? You may not become a so profitable dealer, but it's enough. I mean, even if you have $5,000 spare, you say, okay, I want to make 1,000 a year, which is 20%. That means about 1.6% a month. And that one you can do in a day. This I'm not joking, okay? You can make 1.6%, all right, in one day, and you stop for the whole month. So if you do 12 times a year, all right, you have 19.2%, which is 20%. So 5,000, 20% is about 1,000 a year. Now, you tell me what is your interest you are getting from POSB now, and you tell me how long you're going to get the $1,000 if you leave it in the bank. All right. I'll probably tell you again during the course that you're going to lose money, firstly. That's why inflation is going to eat up your money. So even though you're not going to be a super active trader, all right, but it's good enough that you make some money, which is better than your interest that you're going to get, which is like 0.25%, 0.5%. All right. So let's say you can earn 20% a year. You're only getting 1/4 or 0.5% from POSP. It'll take you 40 years now to get the interest. You can do it in 1 year when you do foreign exchange. So foreign exchange, contrary to popular belief, is not dangerous at all if you learn correctly. All right. If you learn correctly, that means you don't go to this, some of the other courses, they tell you, okay, you come. All right, then they tell you a few bits and pieces and they say, okay, now, here, I give you my, you buy my course, all right? They give you a little thumb drive, whatever they give, I don't know what they use nowadays. And they say, okay, you use this, they tell you free, yeah? But when you go there, they say, okay, now you want to trade, right? You have to buy this one, it'll cost you $2,000. It'll cost you $3,000. The reason why I can say that, my dear friends, is because many of my students experienced that. They came to me, sir, wow, we attended course, I paid 3,000. We learned nothing and we lost our money. Now we come to your course, we pay so little, we learn so much, and now we are in this group. All right. So they are quite appreciative. So I hope you guys who want to attend can take note of that. You'll be part of a community, and then you will learn from each other over the next few years when you start your trading. So anytime that you want to trade, you're not sure of putting in that trade, you can also come to me and say, hey, Victor, I want to sell Aussie, or I want to buy Aussie. Is it a good idea? I can tell you whether it's good or bad, but ultimately, it's your view. If you want to buy and I say not a good idea, then you say, yeah, maybe Victor not so good. This one I buy. It's fine. No? We all have our own views. So please don't scoff at that. You have your own view. You keep your view. Sometimes, eventually, I hope some of you will be much so-called much better than me. All right. That means I have done my part. Okay. Now, okay, another number, unfortunately, I don't have it on the screen, which you all can take note if you are there, is 9876 7157. Okay, this is by the consultancy company I'm teaching for. It's called Tribal Up. All right. Okay, let me go back a bit. See whether it's there. Okay, it's TRIVELOPE, Tribal Up. That number, if you call that number, the director of the company called Faith, right? FAITH. You can speak to her as well, or you can call my number and speak to me as well. All right. So those are the numbers and the QR code that you need. Okay. Okay. One more thing. All right. I hope to see you in your trading journey. And for starters, all right, I can help you earn $250 risk-free. There are some terms and conditions, all right? This will be revealed during the course. Okay, so I hope many of you can come so that I can help you guys in your journey. All right, now I think, let me see. Just give me a sec, huh? Okay, I didn't read that. Faith already told you. Develop skills, okay? Okay, now, who is this? How you see US strengthening coming 6 months? Okay, it's all on the premise that the Federal Reserve changed the tune, put it this way. If the Federal Reserve says, okay, I am going to do tapering, that means I'm going to take the stimulus off the table, so-called, then yes, all right, the US dollar will strengthen. And if inflation starts to go higher and stays high over the next 6 months, then you get a higher US dollar. All right. So again, it is dependent on how the Federal Reserve will behave over the next few months. All right. So so when you attend the course, I will let you know roughly what's happening. Okay, now, for example, let's say June is the Federal Reserve meeting, all right, which is another couple of weeks' time. Then in August, there's this thing called Jackson Hole. That's where the Federal Reserve will start talking about tapering. Okay? Okay. You teach scalping. Again, trading is a very, I cannot do it in one day, but I can tell you what to do to scalp, how to scalp, all right, during the course, all right, how to do scalping. I do it myself, but I do it not every day, but if I see opportunities over the course of the day, then I will scalp. Yes, I do. All right, I can teach a little bit, but again, it's not really part of the course, but I can do that, Okay, let's say, for example, today, all right, if you see the market now, Aussie is 0.7754, all right, 5456. Euro has just broke above 122 figure. So if I were a scalper now, all right, I will buy Euro. Because why? It broke figure, which it did not break for the last 2-3 days. And now it's above that. So when it is above that, then you know it's going to run a little bit more, a little bit higher for the next 10, 15, 20 points. Then you take, you buy, and you run. Yes, you can do that. Definitely. I will do that as well. All right. So sometimes when you do scalping, you can also use the pivot points. All right. The pivot points. Pivot points are quite easy to get, because nowadays, yes, you definitely have to do a stop loss for overnight trades, unless you're like me. Sorry, I say you're like me means because my trades are not very big. All right, let's say my margin, let's say I used to put for 50,000 margin. If I put a 50,000 margin and I do a trade of 300K, all right, that means 6 times. 6 times means 16%. Okay, 16%. My stop loss, I will still put a stop loss. But my stop loss is like 300 to 400 points away. You cannot say don't put, because you know why? You never know in the world. There's this thing called black swan event, where the event can just come out of nowhere and the market move 20% within 3-4 hours. So if you don't put stop loss, even though you do a small amount, like I do, let's say 300K with a 50K margin, 16% margin, they call it. If the market moves 20%, I'm wiped out. But if I put a 300 point stop loss, okay, then I will just get stop loss 300 points instead of stop loss 1,000 points. All right. So it is important to put the stop loss for overnight trades. Unless your amount is very, 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 very small. Then you say, okay, now, it moves even 15%, it doesn't matter. Okay, let's say you have 10,000, okay, 10,000, and then you do, let's say, 50,000. All right, 20%. That one is a fairly safe trade, okay, I would say. Not so much dangerous for that kind of trade. Any more questions? Anyone? Okay, can I just have a show of hands, okay? I mean, you don't have to. You can just let me know so I roughly will know. Anyone thinking of coming for the course on 19th June? Anyone? Or too shy? Never mind. All right. Some people just shy, don't want to say, which is okay. All right. So don't worry. Any questions?
Any last questions from anyone?
Just ask anything, so don't worry. No question is too silly. All right. I always tell my students when I teach, it's only when you don't ask questions that's when you lose the most. When you ask, then you get the answers. Okay, again, if you are shy, don't worry. You can always personal message me, all right? And I'll definitely respond to you, right? That one I can assure you. One final call, one final question. Anyone? Okay, if don't have, thank you so much for your kind attention. And really, I hope to see all of you here, the 7 of you here, 6 or 7 of you here to attend, because I think it'll be quite a useful course to attend. You will learn something new. Even though some of you may be traders or who may be trading now, you'll find that you will learn something different, all right? A little bit from me. Thank you so much.
Okay,
And
thank you
I
very
hope
much.
to see you guys soon. And again, one final call. Do not hesitate to WhatsApp me if you have any questions. All right. So don't say, wow, I didn't ask, I feel so silly. No, nothing is too silly. All right. Nothing is too silly. Thank you and good night.
Okay, thank you very much. That's all for today's program. Okay, thank you.